Why are private markets critical for diversifying an investment strategy? I don't know that critical is the right word. I think the word is prudent and wise. So when you think about diversification and why we diversify, it's because of the unknown. We don't really know what's going to be the best thing out there in the future. A lot of times we think we know because what we hear is what we see today, and then later we realize, oh, we didn't see that coming, or all the signs pointed to this, but it's that happened. And that's a normal part of financial cycles. And if we had a crystal ball of what was going to be the perfect thing to do in the future, we wouldn't need diversification. We would just need the crystal ball. Well, we don't have the crystal ball. Even if we think we do, nobody has the crystal ball. So private markets are just another asset class, and the way we view diversification and what might make sense is, if you add something to a portfolio, does it have the chance to increase your return or reduce your risk, or both? So when we analyze private markets, we look at it through that lens to go, well, if something has the ability to help enhance returns, that's a good thing. If it has the ability to reduce risk overall, that's a good thing. If they potentially have the ability to do both, then that's a win-win. So we don't necessarily believe that all private markets and all alternatives are able to do both. But when we identify ones that we feel like can accomplish both of those objectives, we think it fits perfect with our investment philosophy, because ideally you do want to have the potential to reduce risk and the potential to enhance returns. With private markets, one of the risks that you don't have in public markets that you do in private is liquidity. And so it's always a risk to be measured when you think about how much liquidity that you need. And most of us don't need all of our money perfectly liquid all the time. But there's also a psychological component to knowing that there might be a portion of your portfolio that's not liquid every day like the public markets are.